It's W from W Investing back to look at some of the differences in prices and price predictions of gold per ounce in the month of July. I'm a little bit late with this July video. It's actually July 3rd, but the July 4th holiday has got me a little frazzled. So I'm going to try to get this out early in July so you can make some decisions early on in the month rather than waiting until the end of the month. So anyway, I did my June prediction obviously at the end of May, and I basically said, we've got to get through this 50-day moving average, and especially the 20-day moving average. And for the entire month of June, we basically moved sideways for the price of gold. Now this is the GLD ETF, so if these numbers don't seem right, just add a 0 to the end of it, and it'll be closer to the price of gold, but still not exactly the same. It's a little bit more. Obviously, gold's at like $1,600 an ounce, and the GLD's at 156. But either way, this is the overall look of the gold chart, and I will show the gold price as well at the end, just to give you a look at that. But anyway, today we're seeing a strong move higher in the price of gold, like $18 on July 3rd, and it's, as you can see, it has accelerated through its 20 and 50-day moving average, which is great news. But as you can see in the last month, it has gotten above its 50-day moving average a few times, only to drop right back below it. So we need to see some conviction here. We need to see some buying up to well above 1650 an ounce or so. If we don't see that conviction, it's probably going to hover between the 50 and 200-day moving average. So the 50-day moving average is the blue, and the 200-day moving average is the red. So this is a long-term chart of the GLD ETF, and let's go ahead and just put gold in to show you, to give you the exact prices. So you're looking at gold prices per ounce. See, we're at right at $1,600 today. So as you can see on this long-term chart, with the red being the 200-day moving average and the blue being the 50-day, for over 3 years we stayed well above the 200-day moving average until late last year, when everything just fell apart and gold dropped below its 200-day moving average. Now this was a time when a lot of long-term gold bulls were interested, because anytime gold hits its 200-day moving average, they think it's a buy. But as you can see, they bought in the $1,600 range, and for the first half of the year, they haven't made a penny. They've really broken even. So to see some conviction, I would like to see this 200-day moving average tested. I for sure think that is going to be overhead resistance. Gold will probably test it and move lower. So on the GLD ETF, if this is how you invest, expect it to hit 1610 or $161 and then see a move lower. Remember, markets will be closed on July 4th because of the Independence Day holiday in the United States. Here's gold. I mean, gold's up to about 1620 today. You can't really see it on this chart because it doesn't update until after the market is closed. But gold's up here. It has moved through its 50-day. But I expect 1660 up here to be resistance, and it will be very interesting to see how much resistance. If good news comes out and gold screams higher, then we can expect to break 1780. But until then, look for this range right here to hold. It's good to see the price of gold above its 20 and 50-day moving average, but let's see if the 200-day moving average can be eclipsed to the upside. If you have any questions, please feel free to comment below, and if you like the video, please like it on YouTube.